Hi, welcome to our channel Lalit Miss Raz, Commerce Concepts. In this episode, we are going to learn about qualitative tools of monetary policy. I need to get a home loan of rupees 10 lakh. I went to my bank. Bank approved me home loan of rupees 8 lakh only and asked me to deposit rest rupees 2 lakh into my bank account as margin requirement. Margin requirements. The margin refers to the proportion of the loan amount which is not financed by the bank. Or, in other words, it is that part of a loan which a borrower has to raise in order to get finance for his purpose. Second qualitative tool is moral suasion. It implies to pressure exerted by the RBI on the banks. It is a suggestion to banks. Under moral suasion, RBI issues directives, guidelines, and suggestions for commercial banks regarding credit supply. Third qualitative tool is credit rationing. RBI fixes credit amount to be granted. Credit is rationed by limiting the amount available for each commercial bank. This can help in lowering banks' credit exposure to unwanted sectors. Fourth tool is control through directives, under which RBI issues guidelines to commercial banks in framing their lending policy. Through a directive, RBI can influence credit structures, supply of credit to certain limit for a specific purpose.